Good morning, dear students. Come to our class income tax, subject income tax, and our class topic is today income from profession. Okay, income from profession. So, under professional income, how the income is to be calculated. Okay, now take the problem simply here. Sri Raju, a chartered accountant of Hyderabad, submitted the following particulars relating to the previous year. Compute the income from profession and tax liability if income from other sources is 4 lakhs. Okay, next one. Here receipts are audit fees. Audit fees, companies 2,90,000, banking companies 1,56,000, firms 75,000, others 81,000. Okay. Gift from clients worth 22,500. Interest on bank deposits 3,200. It is a other income. Share of income from HUF ante Hindu Undivided Family is 11,000. Financial advisors 1,05,000. Accountancy works 3,07,500. These all are the receipts. Now come to payments. What are the payments? Here payments are office rent 77,000, telephone charges 32,000, salaries to staff 86,500, staff and given to trainees 27,000, subscriptions to journals 4,000, car expenses 36,800, electricity bill 17,800, membership fees paid to ICAI 2,500, purchase of books 13,000, purchase of computer 36,000. These all are the payments, all types of payments. Next, additional information. Depreciation on car 64,100. 1 month rent 7,000 is outstanding. Audit fees from the bank due is 75,000. 25% of the car is for personal. Tax deducted its source is 1,60,000. It is the amount. It is the payments and additional information given in the problem. Now, how to compute income from profession under the by following income tax provisions. Okay. Now, first you take all revenue receipts first and take the total of revenue receipts all and deduct the all revenue payments. Okay. This is the procedures actually. Now, take one by one. Pick up from the problem. Pick up the revenue receipts. First, take the format computation of Raju's income from profession for the assessment year so and so. Now particulars amount. Okay. First you take the base as the receipts. First audit fees from companies this much, from banking companies this much, from firms this much, from others. Okay. 2,50,000, 2,90,000, 1,56,000, 75,000, 81,000. These are the audit fees received from all these sources. Okay. Of course, it is a professional income. It is a professional income. As a profession, he is receiving the income and towards the audit fees. Take as a total as a base 6,02,000 in outer column. Now, financial advisors 1,05,000. Accountancy works 3,07,500. Gifts from clients 22,500. It is also routine nature, gifts from clients. So these all are revenue receipts. Take the total. It comes to 10,37,000. 10,37,000. 37,000. Next, less payments. Salaries to staff 86,500. Salaries to staff 86,500. Telephone charges 32,000. Office rent 77,000. Stipend given to trainees so much. Subscriptions to journals 4,000. For expenses only, and personal should be excluded. Now 75% you take, yeah, as a professional expenditure. Next, electricity bill 17,800. Next one, membership fees 2,500. These all are the revenue payments. Take the total as a 2,74,400 in outer column. Okay, 2,74,400 is the total of revenue payments. Now you deduct this total of the payments from the above total of the income. It comes to 7,62,600. 7,62,600. Next one, less deductions. Less deductions. Deductions means nothing but it is a depreciation. How much depreciation is given in the problem? Okay, here books are there. It is a asset. Books are asset. So 13,000 into 40% is amortization on the books. So car and computer also 40% discount. Computers and cars. Depreciation is allowed is 40%. Keep in mind. Now, here books 52,000, car and computer. Okay. Now, these are the depreciations as allowed as deduction. Take the total and take the total of in outer column. That is 67,675 is the deductions, that is depreciations of all three assets. Okay, now the income from profession is 6,94,925. 6,94,925. So you have any doubt? So here assessee is following the cash method of accounting. So under this method, outstanding incomes and expenses are not to be considered. So we are following receipts and payments. So that's why the outstanding expenses should not be covered. Next, the assessee is a professional person, so depreciation on books is allowed as at 40%. Now, gifts received from the clients is a professional income, hence it is a taxable. Okay. Now, share of income from Hindu undivided family is not a taxable in the hands of the members of the family. So, because the income is taxed for the family, and Income Tax Act does not permit for double taxation. Okay. Now, next one is. Now, this is the problem. Now we'll discuss another problem also. Okay. Next one is Dr. K.V. Hegde submitted the following income and expenditure account for the year ending 31st March so and so. Compute the income from the profession. Okay. Now, expenses given on the debit side, that's so much to purchase of medicines. He's a doctor. So purchase of a medicines 50,000 is the expense. Purchase of life-saving medical equipment, that is the purchase on 1/5/2018, amounting to 1,20,000. Dispensary rent 24,000. Salary to nursing staff 32,000. Telephone charges 8,000. Income tax so and so. Subscription to the nurse so and so. Gift given to friends so and so. Ambulance van expenses 18,500. Household expenses 86,000. Public deposit in X company limited 40,000. Okay, now come to the credit side incomes. By consulting fees 3,05,000. Visiting fees 66,000. Sale of medicines 60,000. Interest on debentures of a LTD company this much. Pension 40,000. Miscellaneous income so and so. Now here depreciation on ambulance van is 20,000 given. Now this is the problem now complete. So finding out the professional income by adjusting the net income as a given in income expenditure account. Okay, now computation of Dr. Headgay's income from profession here. Because here it is given as, we can do this problem basing on two methods. First, it is an easy method. In the preparing the statement, find out the income from profession as a first take the receipts and less the payments like that. Okay, only we are taking the revenue receipts. Revenue receipts means what? Consultation fees. Yeah, consultation fees are revenue receipts and routine in nature. Visiting fees, sale of medicines, miscellaneous income. So these four are the what we call revenue incomes. 3,05,000 fees, visiting fees 66,000, sale of medicine 60,000, income is 250. Business income is 250. Take the total in outer column, that is 4,31,290. It is what we call it revenue receipts total. Now out of that direct revenue payments. So now purchase of medicines, dispensary rent, salary to staff 32,000, telephone charges 8,000, subscription to generous 1250, ambulance van expenses 18,500. These all are the what we call it revenue payments. Okay, now here revenue payments total is 1,33,750. Now these should be deducted from the above total of the revenue receipts. Now we got 2,97,540. Now from the direct any depreciations are there. Depreciation on ambulance van, depreciation on life-saving medical equipment. Okay, is 40%. On 1,20,000. Okay, now here 20,000 is given here. Now, so simply this purchase of life-saving medical equipment is a capital expenditure and depreciation is about 40%. Income tax is a personal expenditure, personal tax. So gifts to friends is a personal expenditure. Friends is a personal. Customers is a business. Okay, now public deposits in the X company limited is an investment. Interest on debentures of limited companies is income from other sources. Okay, now pension received is a salary income. Pension received is a salary income, so it should not be included in this one. Okay, now it is based on received payments based on valuation of income from business. Now we can do this problem by following the mercantile basis. For example, net income as the income from expenses taken as the base, that is 93,540. Now first one, add inadmissible expenditure. Inadmissible means not concerned to this business. What are they? Purchase of surgical equipment is a capital expenditure. So it is a inadmissible. Income tax, personal property, it is a inadmissible. Gifts to friends, household expenses, public deposit in company limited. These all are not business revenue expenses. Not business revenue expenses. So these should be added as inadmissible expenses which are included in debit side of the account. Okay now. Now take the total of this. The total is equal to 2,62,000 and this should be added to whatever net income given in the above account. So you should add this one to above 93,540. Now after that, less incomes to be shown under other heads. Incomes to be shown under other heads if it is there. So interest on debentures 18,000 and pension also it is not is a personal, that is 40,000. Okay. Now 18 plus 40,000 comes to 58,000 taken out of column and these should be deducted. So we got 2,97,540. Now out of that, from this deduct what? Depreciations. What are they? First, depreciation on ambulance van is given as 20,000 in text in problem, and depreciation on life-saving medical equipment, it is a 40% on 1,20,000. Okay. Next one is it is 48,000. Now here 20,000 48,000 comes to 68,000 total as the deductions. Okay. Now it should be deducted, that is income from profession is 2,29,540 we got. 2,29,540 we got as a income from business. In both methods it will be the same. Okay. Now here I am giving one more. Here these income from business and profession chapter is over. Many problems are covered under this. It is more than enough for you. Okay. Now what is simplified procedure for computing the profits and gains of retail traders also. Okay. So the silent features of the scheme are as the scheme is applicable to the assessee who is engaged in any business, that is wholesale or retail trading or civil construction or any other business except the for the road transport business of cargo. Okay. Now the turnover or gross receipts does not exceed 2 crores in the previous year. Now the scheme is optional. The scheme is available to existing assessees also. Now the income is ascertained by taking the higher of the following two amounts, that is 8% of the turnover or 6% of the turnover in case of digital receipts. So actual income shown in the return. Next one is for individual deductions under section 30 to 38 will not be allowed separately. It is deemed to have been already allowed. And assessee need not to pay advance tax related to this income. Now while computing the total income, assessee can claim the deductions under section 80C to 80U. Okay, now basic books like cash book, cash trade bills are to be maintained. So that is no need to maintain the other books of accounts. The accounts need not be audited also. Okay. Now, so if the assessee claims that his income is less than the estimated one, then he has to maintain the books of accounts properly. So and has to comply with the other provisions of the act. Okay. Now, while working out the problems on income from business and profession, the above said profession are not to be considered. So, to encourage the business to receive the payments digitally, the government has also decided to give the several incentives to the businesses. So, who receive the payment digitally. So, one such incentive is that if the payments are received digitally, he can claim his income to be 6% of total sales. So digital payment includes payment received through the check, demand draft, demand cards, credit cards, etc. Okay. Now he presumptive taxation 50% for professionals also. So the benefit of presumptive taxation is extended to professional whose total gross receipts do not exceed more than 50 lakhs in a financial year. Okay, so the income of the any person making use of this section would be the assumed to be 50% of the total gross receipts for the year. So applicability only to a resident individual. So Hindu undivided family or partnership following the professionals can make use of this section also. Legal, medical, engineering, mathematics, uh, uh, next accounting, technical, consultancy, interior decoration. In this case also. Okay. This is the simplified procedure for computing the profits and gains of retail traders. Okay. This scheme is applicable to an assessee who is engaged in any business, that is wholesale or retail trading or civil construction or any other business except for road transport business of cargo. So that if the turnover or gross receipts does not exceed 2 crores in the previous year, the scheme is optional. The scheme is available to existing assessees also. Okay, so the income is ascertained by taking the higher of the following two amounts. That is, number one is 8% of the turnover. Number two is 6% of the turnover in case of digital receipts. 8% of the turnover or 6% of the turnover in case of digital receipts or actual income shown in the return. Okay. So fine for individual transactions under section 32 and 38 will not be allowed separately. Okay. Now, so the turnover or gross receipts does not exceed 2 crores in the previous year. That is one. Okay. The scheme available to the existing assets also. So the income is ascertained by taking the higher of the following treatment, that is 80% of the turnover or 6% of the turnover in the digital receipts, whatever be there. Okay. Now B, the actual income shown in the return. This is the simplified procedure for computing the profit and gains of retail traders. Okay. Now, okay, this is the problem, students. Now, shall we stop here? Okay. Now, tomorrow we will discuss the next, what we call it, next topic or next chapter also. Okay. Now, okay. Bye, students. We will meet in the next class. Okay. Now, bye.